Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis over on the Bitcoin chart, as Bitcoin has finally printed a bullish candle, albeit it is perhaps the weakest bullish candle that it could have possibly printed. But before we get into the charts, we'll jump over here to the open interest for Bitcoin, and we will be taking a look at the options that expire at the end of this month. And perhaps part of the reason why Bitcoin is pumping at the beginning of June is we actually have more call open interest than we have put open interest. And if you're not familiar with puts versus calls, puts are basically your bearish bets and calls are your bullish bets. And so you can see there is more call open interest than there is currently put open interest. And with that being said, you can see the max pain strike price currently sits at around 34,000. And so what that would basically mean is if Bitcoin's price closed around 34,000, that would be the maximum pain price for both the puts and the calls. As you can see where this would come in at, there would not be a whole lot of put open interest positions in the money, and there would not be a whole lot of calls in the money. And as we get into the technical analysis, you'll see where this 34,000, maybe more like 35 or 36,000 could come into play by the end of the month. Jumping over here to the weekly chart for Bitcoin, you can see that the weekly candle that just closed was a bullish candle. However, this style candle is probably the least bullish candle when it comes to bullish candles. But the current weekly candle is also bullish, albeit it's only Monday, so this could easily just roll over. However, the bulls are currently in control. Now, if I drop in my EMA ribbon, a key level I was actually keeping an eye on was this white line you see running through the chart, and that is the 120-day moving average. And once we broke down below that, the line turns orange because it's now bearish. And as you can see, the price did continue to sell off. However, last week's candle did actually push right up into that level. However, it got rejected right at this moving average. So that is going to more than likely be a level of resistance, and that comes in right around 32,000. And so this weekly candle is currently pushing up towards that level, and the question is, does Bitcoin just reject once again at 32,000? Or perhaps if Bitcoin is able to breach above that 32, maybe 33,000 level, then we could be headed towards that $34,000 strike price we were looking at, or perhaps even up into the EMA ribbons, which, as you can see, have flipped bearish with your greens and blues down below your reds and yellows. And so this could actually act as resistance, and that would more than likely come in at around 36,000, or maybe even this level of support back here, which was 37.5. Support often will flip into resistance on the way back up. And so if that does become resistance, we could see a nice pump, only to roll over into a dump, and then perhaps Bitcoin sells off even lower than this current level of around 28.8. But again, it's important to keep in mind we are taking a look at the weekly chart, so this would play out over perhaps a couple of weeks, and therefore that might put us out around the end of June for the end of this pump and then perhaps the dump. But with Bitcoin, we don't make predictions because it is very volatile, and it could literally pump in a week and dump the very next week. And so all I am really interested in is the current price action and key levels of structure, and that would be support and resistance levels. And so right now I'm really looking at this resistance zone of 32,000 to 33,000, and then more than likely 35,000 to 37,000 for the next level of resistance. Support wise, we're looking between 29 to 28,000, after that down to as low as 20,000. And to get a better idea of those levels, I will drop in here my Fibonacci retracement levels. And you can see right now the 786 level is right around 31,300. And Bitcoin is finding some resistance around that area currently, where it had also found support briefly on this weekly candle, only to eventually sell off. But that same 786 level, if we look back and check our 6, was support back in this area when the price of Bitcoin sold off last summer. And so it could be a very valid level of resistance at this point in time, because it has acted as a valid level of support even way back into this area before the bull run really took off. But again, as I mentioned, if the Bitcoin bulls can push this price above this, say, 32 to 33,000 level, the next level we're looking up at would be the 618 level, and that comes in at just about $35,000. And then shortly after that, it's no surprise the 50% level comes right in at that 37.5, which you can see this orange line comes right in at the bottom of this support. And this is really why Fibonacci retracement levels are so heavily looked at in the world of trading, is we see them repeat time and time again as valid levels of structure, simply by just drawing in from the low to the most recent high. The majority of these Fibonacci levels actually line up with valid previous levels of structure. And so on the flip side, if this price action just ends up being a pump before the dump, the first main level that Bitcoin really needs to hold is that $29,000 to $28,000 level. A breach down below that has us headed towards 26.7, which would be where this candle wicked down into, and we're basing this entire Fibonacci structure on. If Bitcoin breaks down below that level, we could be headed as low as the 1272 level, which would put us right around 21,000. And after that, then it could get real ugly and Bitcoin could sell off into the 1618 level, and that would put us around 13,500. So with that all being said, some of the key levels I will be watching for Bitcoin is if the bulls are able to push above 32 to 33,000, then I'd be looking out for probably around 35,000. And another reason I would have that 35,000 to 36,000 level targeted, if we jump over here to the Bitcoin CME futures daily chart, we have a gap that has yet to be filled. And as I've pointed out in other videos, Bitcoin often does fill its gaps. And so the question is, will Bitcoin fill this gap perhaps here in the month of June? There are a lot of indications that it could. And that gap would be right around that $36,000 level. Now, at the beginning of last week, we saw a push up into that 32,000 level only to get rejected. Now, the question is, as this week has just started over here on this chart, do we see a continuation and a push above 32,000, or does Bitcoin get rejected once again at 32,000 and sell off down to this 28,000 level, which again, you can see it has acted as support. And really, at the end of the day, all that really matters is Bitcoin's price action. There is no one out there who can actually predict where Bitcoin is actually going to go. We just take a look at these charts, keep in mind these key levels of support and resistance, and trade based on our battle plans and those levels. So, I think that pretty much wraps it up for this video. It looks like Bitcoin is going to continue the pump. The question is this just a pump before the big dump? If anything changes, I will definitely do an updated video over here on the charts, so now would be a good time to shoot that subscribe button. If you like this video, do me a favor, spike a like. If you have any questions or comments, drop them in the comment section down below, and remember, never send your money into battle without first doing your recon. See you in the next video.